All right, guys, let's take a look at the Euro USD. And this is going to be kind of an addition to the ideas that I put out earlier, based on what I'm seeing right now in terms of the price action, what we're going to look for in terms of FOMC tomorrow. And also for the rest of the week, we have unemployment claims. And then, of course, Friday, you have NFP. So, from purely a technical standpoint, uh, I've been talking about a falling wedge on the Euro USD that's been playing out now for probably the past, I would say the past month. Things have just been going sideways here. Then we had that drop, and then I thought initially maybe around here we were going to make a move to the upside, but you can see it got kind of sloppy with, uh, we have a wick to the upside and a big wick to the downside, and then things started just equaling out, not really making any significant moves. And I think what the market was trying to do, or at least in terms of waiting for data for the first economic release of interest rates, which is tomorrow. The market's probably waiting for some type of information to kind of gain traction of where it wants to go. But if we draw out the wedge of what I've been talking about for the past week, you can see how this has been playing out. And I like to use the magnet tool to kind of get a close read on it. And you can see how really it's just been wedging up little by little. Even when we had a significant move, I think it was about 4 days ago, it's still respected and stayed within this wedge. Now, does that mean it's 100% going to be a bullish move? No, not necessarily, right? Especially with significant data coming out for the next 3 days. So price can do anything. That's why we have to manage the risk and see how the price action is going to react till we have the news coming out. But right now, this we know, for those who are familiar with the falling wedge, know that this is a bullish pattern. What I like about this setup is that we have a bullish pattern here, but we also have it coupled with a MACD hidden divergence. Obviously, as price has gone not necessarily sideways, but it's been slow grinding to the downside, but still relatively sideways. We have the MACD making a low here and a much more prominent low here. So this is obviously a lower low than this. And then here, if this, assuming that this is going to be a low, we have a slightly higher low than this previous low here. So what I'm looking for is for the market to gain some steam and push to the upside and kind of revisit this pivot zone right over here, which is slightly above 1.09. And this is probably about 75 to 80 pips away. If the market decides to go to the downside and break down to the downside, I'm going to be looking for at least this area right over here, which kind of matches up with this area of previous support here. And if I draw that out with this rectangle tool, you can see this area right here is what I would think that the market's going to push all the way down if it goes to the downside. So that would be a low of at least 1.0750, which is what I stated before in my previous idea. But again, for this setup, this is certainly a bullish setup. And then we have a bullish setup here on the MACD as well. So again, just to add, sometimes the setup could be absolutely perfect, but sometimes for whatever reasons or things that we don't see, the market does opposite reaction. But for now, for a purely technical perspective, this is a bullish setup. So I do have some longs here, and I'm waiting to see if the market's going to push up harder during FOMC. And just to keep in mind, I'm not big on news. I don't trade news. However, I do pay attention to the price action around big events like the Federal Reserve, FOMC, and interest rates, because that tends to let me know that there's a potential high volatility on the way. So it gives me an idea to watch out. So even if we head to the upside and we have a huge move tomorrow to the upside, this can easily go all the way down here for about 50 pips and then leave a long wick and move to the upside, or in the opposite can happen. Okay, so you have to manage the risk and make sure to see, you can withstand the whipsaw. Sometimes there's no whipsaw action, but you just never know how price is going to react, right? So this is a bullish setup. I'm looking for this to move up to the upside to at least 1.09 and extended. Obviously, it's not going to be in one shot, but all the way up here to a 1.1150. My long term, if you guys have seen my long term perspective or more viewpoint, my projection long term is for the euro to hit 1.15, extended all the way to 1.2, which is all the way up here. So we're not going to get that straight away. Obviously, the market's going to move up and down, and we just have to see how this market's going to react. Other two markets that I'm looking at quickly, my main focus is Euro USD, but if we look at British pound against the US dollar, you can see it kind of making a, I wouldn't necessarily say a triangle, although you can say, you can draw it out for a triangle just like this. I'm not really looking at it like that. The way I'm looking at it is that we have that resistance here. It's making big moves, or I should say slower moves to the upside, and then one big drop, right? Did that here, one big drop here, then a slow grind to the upside, then another big drop here, and then another slow grind to the upside. Now, a lot of traders are probably trying to go short here, looking for another big drop. But again, my long-term perspective is bullish. So I'm expecting for this to continue to the upside and start trading higher. So we'll have to see what happens with the pound against the US dollar. One more thing I'm looking at here is Australian dollar against the US dollar. It's already started making a move up. Now, I really like this setup because it was a double. I guess you can put this in the category of double bottoms, right? You have this bottom here, this low, and then an equal low. But I also like that the MACD had a very significant lower low, which would make for a hidden divergence setup, right? So if you're holding long here, I think you're in a good place. You just have to make sure that the market's going to make some wicks. So even if it makes a big move, attempt to the downside, at the end of the day, the market can make a complete reversal and take off. I'm sure many of you have seen that time and time again if you've been trading for any significant amount of time. Sometimes the market does something early in the morning, and then by the evening, it's a completely different story, right? So this is why we have to not just manage the risk, but wait till, to make a complete decision on what we want to do. It's best to always wait, at least for me, in my opinion, to always wait till the daily candle close so you have a clear picture of what the market did from the open until the close of that daily candle. Or if you trade shorter time frames, give yourself an opportunity to see what the price action is going to do from the opening for the day until the close of the day. All right, so that's what I'm going with right now. I'm looking for this to be a breakout to the upside, but of course, and we go break lower below this trend line, and especially if it's a significant drop, then I will exit all long positions and just wait on the sidelines. If we end up going to the upside, I will target here. I might, depending on what the move is like. If we make a significant move up here to 1.09, I will actually move my stop loss to break even and let the market do whatever it's going to do, and then target this up here, which is probably about 300 pips away. Yeah. So we'll see what happens tomorrow. Trade safe, and we'll see what happens with the Federal Reserve, and also on Thursday, which I believe is unemployment claims, and Friday's NFP. So I'll see you then. I'll see you in the next video.